Daily video. Today is December 13th, Wednesday at 7:50 p.m. Eastern Standard Time. Okay, so first thing first, we just had the Australia employment data, which came out as a very big surprise. Let me show you right here. Came out a very big surprise, as you can see, 61.6 thousand versus the expectation of 18. Unemployment rate was also in line, and this one doesn't show, but the participation rate was also better. We have 65.5% participation rate. The expectation number was 65.1. So all in all, very good picture. Let me take a look at the how is it the full-time job or part-time job? Okay, because that's also important as well. So the full-time employment, the prior was 24,000. This time was 41. That's actually very good, because that means we actually added more full-time employment than before. So all in all, very good job data. Now on top of that, if you take a look at the copper market, today we actually have a huge rebound for copper, which is a very correlation to Australian dollar. On top of that, if you look at DAX, now US dollar had a huge drop today. Why? Because we have a very typical buy rumor sell fact today. Federal Reserve did raise interest rate from 1.25 to 1.5, but everything else was the same. There was really no surprise. We actually have two dissent votes. So the two Fed member was actually vote against the rate hike today. They actually think that rates should kept unchanged. So that, on top of that, this morning the CPI data was in line, but the core CPI will actually drop. So if you expand this one, not a really good picture. If you look at core CPI, virtually we are flat. Right? Since May, it's 0.1, 0.2, 0.1. Now we're back at 0.1. So again, it just shows you inflation is still very low. It's still not high enough for Fed to continue the hiking cycle. Now, make no mistake, they are on the hiking cycle, and 2018 they will hike in 2 to 3 times for the plan. The whole economic data-wise, US dollar is still a booming economy. Everything is still looking well, but in the short-term sentiment, we can see that DAX really just heading to the downside. Now, it doesn't mean I will go ahead and just short US dollar. The reason is because you also have Bank of England tomorrow. So don't forget, Bank of England will also have the rate meeting, a monetary policy summary tomorrow, which they will most likely talk about the inflation, because Tuesday we also have 3.1% inflation. But aside from this, today the Parliament in UK vote actually against the government. So right now every MP will have a right to reject the Brexit deal. Now that, of course, it's completely weaken the control for Theresa May, but the market actually didn't perceive as bad event, because they were thinking that if the parliament have a say, then there's less likely for a hard Brexit. If the parliament member all have a say in a Brexit deal, then they might really make it in a more softer exit. Now we never know, since the UK is very highly geopolitical correlated right now. In terms of euro, we're also going to have an ECB press conference tomorrow. So, although euro looks very nice technically, I mean, you could see that this is an uptrend. We are right at 50% area, and now it seems like we are going to heading into the upside. And I think, yes, very likely we might actually heading into the upside. But because of the ECB tomorrow, for me, I'd rather just wait after that, because who knows, maybe Draghi will come out, give a very dovish comment, which is also, it's going to drop euro dollar again. So for me, if you are a day trader, scalper, yeah, you could, maybe you have done it already to take advantage today out of the FOMC meeting. But for a swing setup, I really don't want to get in until tomorrow's meeting. Because if you look at the bias, fundamental bias, US dollar is still, the central bank is still on a hiking cycle, where ECB is not. Okay, ECB is they are not even finished up with their stimulus package, where the US is already looking up for another 2 to 3 rate hike. So there's a very big fundamental bias in terms of these two things. Now, on top of that, US is going to reduce the corporation tax. That already inject a lot of worry over euro, because they were thinking a lot of corporation will actually take advantage of that and going back to US, which was the original plan for Donald Trump. So all in all, I wouldn't really say dollar is going to be weakened for the next month or years. No, I think dollar is going to be weakened for the next few sessions for sure. But tomorrow, since we also have ECB, I don't want to get into a swing setup. Now, I did just took a day trade just right now. Why? It was not planned, not expected, but because of the Aussie data, such a big surprise. On top of that, we also have a lower DAX. So I actually just jumped in and took an Aussie dollar trade long and wanting to ride this sentiment to the upside. Now, as you can see, it's only a 5-minute chart because it's really just a day trade. I think Aussie dollar will also go to the upside. But then again, the fundamental bias between RBA and Federal Reserve is still very obvious. One is in a hiking cycle, the other one is not. It's not even looking to hike. That means this push is just a temporary, right? Temporary, you have a good labor market data, you have a good commodity market to push Aussie higher. But Aussie still suffer from a low inflation. The GDP was still not good from last week. If I just show you like here, you see last week, the right here, the GDP quarter on quarter was actually flat. It's lower than expected, lower than previous. So that's one of the reasons for Aussie to go down. Trade balance was also negative. So all these are still a big factor for the Australian economy. So because of that, I wouldn't think that Aussie dollar is going to go up indefinitely. I don't think it's going to be a good swing set straight up. Of course, if you look at a chart, yes, we have a big retracement. If you're drawing from here, right, the low of the low, then yeah, it looks like a very good risk-reward ratio. You might just keep going up. But for me personally, I just think the sentiment is certain for now, but I definitely don't want to go into forward chart, especially this is pretty much the last week for me because next week is heading into the Christmas. So this week, I'm pretty much going to unwind a lot of my position. And next week, I most likely not going to take any swing trade. I'm just going to day trade. And I'm going to wrap up before the weekend of 22nd. And that's it, all the way until New Year. Okay, I'm going to be off. I might just stay beside my desk, still doing some day trade. Now, that's pretty much the biggest event today. So as I mentioned, we also have a UK labor market today. This doesn't provide too much momentum for UK because biggest event for UK for British pound today was the Parliament vote. And right now, again, it was a setback for the government. But as I mentioned, you always have to see how the market perceive in that. And the market actually perceive in a positive way. Okay, so we might continue to see British pound gaining strength. That's the thing about British pound. Very, very hard to trade in a swing setup. Upside movement. If you want to trade day trade, you might have a better chance. At least for me. And CPI, I already mentioned about that. I'll see. So tomorrow, watch out. First of all, you're going to have a LIBOR rate from Swiss franc. Not important because this is really, they're not doing anything new. So this is not really important. Big event will come at 7 a.m. Bank of England. We'll see what happened. Just pay attention to the vote, right? This will be more important. I don't think they're going to change the rate. Most unlikely, they are not going to change the rate. Take a look at monetary summary. They don't have a press conference for this one. So monetary summary and the vote will be your only guiding point. And of course, you have a ECB, which they have a press conference. So this will be more important. And that's it. That's a big thing. Then don't forget, you also have a Paula Speaks on the afternoon. So that's for tomorrow. Now, I am currently, again, I'm in Aussie dollar trade. I just got in, so a short-term trade that I'm doing right now. New Z and Aussie really looking bad for my trade, because remember I short these two trade against Canadian dollar. Now Canadian dollar unfortunately dropped today because the WTI. Why did it drop? Well, really no particular reason, but if you look at the crude oil, it is a drop, but less than the previous time. So maybe that's one of the reason. And all in all, this is a very strong strength in New Z and Aussie right now. In New Z, of course, because the new RBNZ governor, you see, this is really a strong sentiment continuation from December 11th all the way until today, right? So it's just a very strong, and this was out of my expectation. I mean, honestly, I did not know this information. And Aussie, because of right now, the labor market, the commodity, so Aussie also continue to shoot higher. And New Z Cat also got stopped out yesterday. Dollar yen, I'm still in, but I have basically moved my stop loss to break even because of today. So because of FOMC today and the lower inflation data, I just don't want to risk basically another trade over the holiday season. Dollar CAD, I'm still in, but not a whole lot of thing happening for Dollar CAD because both currency are sort of in the bearish sentiment right now. Both of currency are very fundamentally strong, but they both are also sentimentally weak at the moment. Cable, on the other hand, I didn't short. I was saying that really attempting to short, but I want to wait after the FOMC, and I'm glad I did because it turned out that dollar completely reversed its sentiment, and right now it's a weakened sentiment. Euro dollar, I'm very tempting to go long, but as I mentioned, I want to refrain myself from doing that just because the risks are too high. I rather wait after the ECB. Now, people, sometimes you wait, you miss the trade. That's fine. It really depends on your own personality, right? If you are more a risky personality, you really like to basically take advantage of that. Yeah, you could getting now, things like that. For me, I really like to have a better probability for every trade I took. So for me, I don't want to just jump in at the moment. I will wait after the ECB tomorrow. But also, I don't want to go with like a 4-hour chart, right? So most likely, I probably go 5 minutes, or I probably go 1 hour, and then I will looking for a good entry. Maybe I'll use this cycle as an entry tomorrow to get into euro dollar, things like that. Okay, so that's how I look at the trade. I definitely don't want to, especially the holiday season coming up, don't really want to get into too much of a swing trade. So pretty much that's everything I have right now. I'm still in dollar CAD short, I'm still in New Z yen short, and I'm still in dollar yen long, and I just got in Aussie dollar long in a short-term perspective. Okay, so that's pretty much all I have. I got stop out today at my Aussie CAD. I also got stop out on my New Z CAD, which I'll show you right here. So my biggest lesson for myself is really, and this is something I kept making the big mistake, and this really comes down to my personality, very, very impatient. So my biggest lesson was never ever take trade that has too much correlation, because that will really add on a lot of risk. So for example, I took New Z CAD short, I also took Aussie CAD short. So on the hindsight, it looks like a completely different trade, but they both are to do with Canadian dollar. So of course, when Canadian dollar goes weaken, then both currency will go up, and then if you're short like me, you'll get stop out. Now that's one of the reasons, right? And originally I took those two trades because I thought Canadian dollar will not go weak. I don't think there's any reason, and that was right. Canadian dollar didn't really go weaken for any reason. However, Aussie and New Z simultaneously become strong. That was rare. That was actually rare because normally you have a strong Aussie, you have a weak New Z, or vice versa. But it comes down to surprise. It was just outside my analysis that New Z went stronger because of the new governor. Aussie became stronger because of the commodity market, and also today the job data just push it higher. So you never know, and you never know the complete picture. So the best way is not to overexpose yourself, not to risk too much percentage on the same single currencies. If I short USD CAD, short Aussie CAD, essentially I have 2 CAD trade. Okay, so that add on my percentage, and that's why it's really not a good practice. Really not a good practice. And this is one of my biggest flaw as a trader, something I'm really continuous work on. Definitely something, well, depend on you. If you're fine to over leverage, then go ahead. But for me, this is something I always have to remind myself. Don't get too excited. There's no such thing as a sure thing. So don't over leverage your trade, because you don't know what's gonna happen in the market. Okay, so guys, that's pretty much it. I'll be back tomorrow, and look out for the 2 central banks tomorrow. All right, thanks for watching. If you have any question, please let me know. Bye bye.